Hi everyone. Today let's talk about why that recession hasn't happened quite yet. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So the secret to stock market success and why the recession has not happened yet. They say the central bank has been helping out the buy and hold and the buy the dip investors. But let's take a look at why we haven't slipped into that recession quite yet. They say it's been a long winter for the bears, busy season for the stimulus. So we've been seeing stimulus across markets, but now that is starting to come in with the country's runaway inflation trying to tamp that down, as well as the sudden rise of the Japanese currency, the yen, also sparking concerns in the markets. You can see during the rate hikes, markets were coming down. Now we're seeing cuts, markets are rallying through. And they say basically the same thing I've been saying for a long time. We've been looking for those recessionary indicators, and there have been plenty of them out there. But so far, that just has not happened yet, and markets continue to tick higher. They also mentioned that the economy is not the same as the stock market. The economy has been humming along. The job market has been pretty decent, not amazing. They say it's bustling here. I don't know if I would say that. Consumer confidence and consumer spending has stayed quite strong in goods and services, which tend to be when the stock market is at its strongest, which is what they're highlighting here. They also mention there were years of zero interest rates, massive bond purchasing programs during that time period, so people locking in super low rates, potentially allowing the market to stave off some of those downturns. They also mentioned some of the similarities to the Nikkei, which also had some terrible times after it had that massive run, and just now recently got back into some of those same levels. In terms of central bank balance sheet, you can see the Fed and the ECB have been selling off, but the Bank of Japan has been holding pretty flat in that same area. So we'll see how it plays out. Eventually, markets tend to follow the money supply. We've been talking about that for a while. But so far, all of the recessionary indicators have been wrong. You had the inverted yield curve, which is back into normalized conditions, which typically means that a recession is on the horizon. They show that here with the credit funding program as well as the bank funding program. But the yield curve is in normal conditions. You want to compare that to the 2008 area where you have the inverted condition. Here you get those kind of crazy spike ups, recessionary period, and then it gets back into normalized conditions somewhere in there. But we had a little bit of a spike up. We're a little bit concerned, but we're already in normalized conditions and we haven't seen that recession come quite yet. We also had the SAM rule. We talked about that when it happened. The jobs data weakening, unemployment rate going higher. Does it technically meet the indicator? Definitely some disagreement on that, but was this a false indicator? Hard to say quite yet. Typically, very, very accurate indicator, and it did flash red if you look at it, not with any of the external factors. And then the evolution of productivity. A lot of stocks have been continuing to stay very, very productive. You can see it here. The US did rally aggressive, slight pullback, which is kind of what markets did, and now we're waiting to see if this continues higher. But the other countries have been going pretty well straight up. Economies tend to expand over time, which has been doing well. In terms of opportunity, they say consider the equal weighted S&P so you're not nearly as concentrated in those big tech stocks, mostly the Mag 7. Otherwise, S&P 500 is the way to go based on this. Kind of a simplistic recommendation in my opinion, but overall diversification, mixing your portfolio should give you a better opportunity over the coming weeks. Let me know down in the comment section what you think the economy is going to be doing. Is it going to stay strong through this cutting cycle, or will markets eventually turn down? Obviously, they eventually will, but let me know what you think. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.